Another day, another dollar. Welcome back to the Everyday Growth Advisors live stream. I hope you're having a good morning there. What an eventful day. Nasdaq is actually up, and so is the S&P 500. This has not happened for a long time, so I hope that there is some good news on the books. Today's topic of discussion mainly going to be unemployment numbers and inflation. Lots of things happening around the world, some financial breakdowns with some liquidity systems as well. I don't know if you guys heard about the Archipelago over leveraging situation as well. And then a couple of also prime brokers that over assign some overly exuberant levels of debt to a risky trader. And lots of interesting stuff going on with the markets. Markets really just kind of reacting to everything. And we've been kind of building solid positions in our portfolio for a while now with Chinese stocks, etc., etc. We took. I also called out Chewy a couple live streams ago. They beat earnings. I have a $93 call. Let's hope that this contract today pays out. So I hope that that will be something that will be profitable today. Hopefully we'll see how that goes. Apart from that, our portfolio is doing pretty nice. We have a substantial amount of firepower left to get through this year, and I'm not one bit at all looking at this negative P&L that we have going forward right now, which doesn't affect my mentality so much because of the short-termness of tech being oversold. In fact, took this opportunity to solidify all my positions for this next bull run. Remember the seasonality of the S&P 500. March tends to be a pretty bad year for the S&P 500. And then before the next earnings season, which is going to be happening in about 2 weeks from now, the week of 12th. So you'll see institutions and market makers start to position themselves for this earnings season and expect lots of movement and volatility coming up in this next 1 to 2 weeks. So mainly that's the topic of discussion today. I wanted to kind of put it out there and make sure that you guys know about it. China's COVID rebound, I just disclosed there, overtaking U.S. economy. As I've been mentioning multiple times, I mentioned during the webinar of this week, I've mentioned it, countless number of times this year. The Chinese stock market is where you want to be. This is absolutely a great opportunity, once in a lifetime opportunity for you to pick up Chinese stocks for a very cheap price. The K-Web is down 30% from its highs. It is an absolute right time for you to enter this market right now. 27%. It was at 30%. And I picked up a lot of my positions down here. And now I'm going to ride this next wave to the upside when it is going to outperform the U.S. economy. Remember, GDP numbers are still expected to be extremely high this year because of pent-up demand and lots of services and goods that are going to be produced throughout the course of this year. Even though we'll have higher expenses and higher inflation, it does not mean that the economy will not be strong going into the end of the year. Okay. Now, am I expecting like double-digit growth on all the economies? Probably in the Chinese stock market, but I can't say that we will achieve double-digit growth in the S&P 500 this year. I've mentioned throughout the whole year, I expect single-digit growth or maybe low double-digit growth, maybe 10%, 11% in the S&P 500 this year. I expect us to revise that downly because we have had 2 consecutive years of double high-digit growth. And therefore, this year can't be such a high growth period for the S&P 500. It just makes sense, okay? It makes sense. This is an opportunity for you to pick up entry into a market that is about to outperform. If you are not taking this golden opportunity in Chinese stocks right now, I'm just gonna say I told you so on the 31st of March. Okay, and we will review this video at the end of the year, and I will show you that this was the opportunity indeed to pick up some positions here. I'm not saying go ape shit. I'm saying pick up some positions so that you have exposure to these markets, because these are markets that will perform well in the next coming years, okay? Another one is the ARK Fund, right? The ARK Fund, which is finding support at the 200 EMA, and it has been doing so, right? This is a very, very key moment to pick up all of these funds, the funds that are underperforming, the tech funds that are being sold off that nobody wants. When everybody is running away from them is when you start building positions in them, right? Okay. That is what you should be doing or taking advantage of. The ARK fund is now 28% down from its highs, right? So these are all things you should be looking at, okay? You should be looking at these things because these are opportunistic moments for you to pick them up. Now, I'm not saying everything in this fund is undervalued. What I'm saying is collectively it provides a good diversification for a portfolio that is seeking for high growth, right? And so this is a moment when you can jump in and pick up some positions, okay? Too many bad Chinese stocks though. I don't agree with that, or I don't know what you mean by too many bad Chinese stocks. The KWEB portfolio, if you look at it, if you look at all of the stocks in the KWEB portfolio, they are all great Chinese stocks, and that's the reason why I own KWEB. I don't own any other specific stocks, right? The only individual stocks that I own are Baidu, are Baba, and KWEB. I don't own anything else, right? I don't own anything else. You can see for yourself. This is all that I own. Why did I buy Baidu? It was undervalued. Why did I buy Baba? It is undervalued. Why did I buy KWEB? It's absolutely undervalued. It's a no-brainer, guys. Okay? I only buy things that are undervalued, right? You buy things when they're undervalued, and you sell them when they're overvalued. Rinse and repeat till you get rich. That's it, right? And if you don't know how to value, then you have to make that a part of your skill in addition to technical analysis. Simple as that, right? You don't grow if you don't learn. And so my portfolio allocation is looking pretty well diversified at this point, right? I have sector breakdowns here. 35% in US tech, 5% in industrials, Chinese tech 15%. I don't have an over allocation in Chinese tech neither. Consumer services, ETFs, consumer cyclical, healthcare, automotive, and SPAC. This is speculative. I have a good balance between all of this, right? So this year should be an interesting year. Also, the ARK fund released a new ETF called the ARK Space Exploration and Innovation ETF. This fund has Boeing, it has JD, it has a bunch of companies that are all within the aerospace industry and also the space exploration industry. You might be wondering some of these are questionable, like NVIDIA. Why is NVIDIA here? Where and NVIDIA is a producer of semiconductor chips that will power all these systems. Why? They are driven by AI. They're driven by future technology, right? Amazon, what do they do? Well, Amazon's also investing in all those initiatives. Alphabet, right? Teledyne, Garmin, GPS positioning, Space, SPCE, Airbus, Alibaba, they're all these AI, anything to do with all of the AI tech is all part of this ETF as well. So there's a lot of positions in here that overlap multiple industries. Just thought I should bring that to your attention there, that the ARK fund for this specific thing is now live. Okay. Okay, let's see. Welcome in, guys. Welcome. How the reflation trade global markets, 7 charts, Singapore exchange. Okay, news is not really that interesting today. Nothing really making the fun line here. If we look at the Wall Street Journal, let's see what they're saying. So today we have a Biden infrastructure plan that is also being released. It's a $2 trillion plan, apparently, that is going to be focused on building lots of connections between cities and counties and infrastructure in general, and then also aid for elderly care, and what else was it? That was a whole bunch of things in here. It was, right, modernizing to 20,000 miles of roadway, building electric vehicle charging stations, right? These are all bullish things for EV companies. We have Sunrun on our watch list today. This might be something that might take off, especially since it's breaking out here. Boeing also looks like a great buy over here, by the way. Don't know if you guys are watching this. Boeing's looking like it wants to peak out of this bullish ascending pennant over here. It's already pre-market. It's up. If it does break here, it might go up to the 260s. We have a target here. Boeing's also on our snipe list today. This is something that we're looking at. also, yeah, there are a whole bunch of things on our snipe list for the Discord today. Really great opportunities in the market, especially if the market goes bullish here. You know, we'll see a lot of opportunities in tech as well. Amazon debit spreads might be good here. You know, if we can find a good little a correction up to this point over here. And what else? Yeah, so there's a lot of opportunities in market right now, guys. Everything's, you know, looking over either in a bullish ascending pattern, or it's looking in a formation where it wants to break out, or, you know, there at some point of time, let me tell you that you're going to be spoiled for choice. So you really have to go for the high conviction names, the ones that you know are going to do well, right? Baba is a great one that's super oversold, that has a great risk to reward ratio to the upside, to the 240s here, which is the nominal level of resistance up here. This is another one that could possibly rally if things go well, right? And there's also CCIV, a undervalued SPAC company, right? Sorry, not undervalued, but overly sold off SPAC company, right? There's also Etsy, right, which is off its highs big time. There's also Tesla, which is trading at a discount at $635. There's also Zoom, which is now down almost 50% of its value. Not 50, but a little less than 50%, right? There's also Roku, which is down 50% roughly, less than 50% of its value, right? The stock was trading at $490. Look at where it is right around $300, right? There's also Chewy is another one that you might want to trade today. This one's up 14% now, $92. I have those 90. I have the 93 call, so let's see how far it can push up when the market opens in the next less than 1 hour here. Okay. What else is there on here? Delivery shares, America's imports are stuck on ships floating just off Los Angeles. How Japanese investors accelerated treasury sell-off. Okay. Traders worry about NFT. Forget about. I don't even want to look at NFT. Specs assignment fade. Okay. Cool. All right. Well, the news is looking interesting. The Nasdaq's rallying as we speak. Nasdaq futures are up. You can see right here. So let's have a look at them real quick. If you remember on the previous live stream, I was talking about how Nasdaq was rallying within this little pennant right here, ascending pennant, and we've kind of broken out of it. We have to break above this level here at the 12,992 to capture. Bulls need to break this to capture the upside, if any. And the bears will need to reject this level in order to stay down today. If we break out at this level today, then we will see upside for the Nasdaq coming in the next week or so. Remember that this week is a short trading week, okay? And remember, Friday is off. We will not be holding a live stream here. And so we need to actually pick a ticker of the week for next week today. So actually, if you want to go ahead and vote for the ticker of the week, I chose Palantir this week because I was actually curious as to how this stock would be valued. And true enough, it is actually overvalued, which I'm going to get to in a second here in the last 10 minutes of our live stream. Let's also look if there have been any buys or sells in terms of insider trading here. Coca-Cola, European president, sold some shares, 30%, okay. We have done IQ, by the way, before, Johnny. Ride is a possible one, we'll see. Waste management. McDonald's, that's a good one. We could do McDonald's. I wouldn't mind McDonald's. Damn, McDonald's is a great one. You guys want to do McDonald's? I'm so down for McDonald's. What there now? Let's see. This guy. Okay. What's the CVS? Ooh, that's a big sell. This is a big sell right here. EVP and General Counsel sold 49% of his shares. That's almost. Oh, actually. Yeah, okay. Well, he sold half his shares. Okay, that's not too bad. Zuckerberg sold another 15 million worth. Another 56,000 shares. Zuckerberg has been unloading a lot of his shares. He probably wants to buy like some really big house or something. Broadcom, okay, let's see. Alright, nothing else here of note. Daily Treasury yield spiking up again, 1.73. Let's go have a look at what's going on with the US 10-year. At 1.717, we went up to 1.77 yesterday. This thing continues to climb. As I was saying, by May, I think that we will be at 1.8 or 1.9. It may even go back to 2, the yield for treasuries. That would be opportunistic moment when the cycle starts again. We have bonds retracing back to these levels from last year, which is a good thing, right? Right before the crash and where bonds were being bought up like crazy and yields dropped and plummeted all the way to 0.352. We're coming back to nominal yields of last year now. So 2.0 here, this level is still very nominal yield for bonds, 10-year I'm talking about. But the only thing about this that sucks is this doesn't, it doesn't improve the equity risk premium structure. And so we may see a little bit of a cool off period once we reach the 1.9 levels here, and we'll see if we can get some bond appetite back up as the yield for the bonds start to cross over with the S&P 500 dividend yield, which is sitting at 1.53%. That would cause a natural shift of people buying up bonds, pushing this bonds yield down, and then setting up the precedent for equities to become risk on again. So that cycle is going to continue on into May. That's something that we have to watch. The equity risk premium will be something that we have to watch, continue to watch. I hope you guys understand what I mean by this. I'm going to try and explain it again once again. You see the bond yields here. Remember, bond yields and the price of bonds and yields are inversely proportional. So when people are selling bonds, the yields go up. That means this yield, which you see are going up, is because people are selling the 10-year bond, right? And when the yield of the bond goes up to the point where it's higher than the S&P 500 dividend yield, which we're going to get a new dividend yield again this month, right, in a couple of days, then what happens is that people choose to hold bonds instead of the S&P 500, right? Why would you want to hold a risky asset when you can hold a risk-free asset and get a higher dividend for it in terms of coupon payment? So that's the conundrum that most investors will be faced for institutions and mutual funds at that point, right? And so we have to keep tracking that to make sure that we don't go into overzealous number there. The 30-year bond though is kind of stabilizing here, as you can see. The rates between the fatter tail of the bonds have been kind of increasing at a decreasing rate, which is good. It's good. That's a good sign. We want to see the 30-year bond rate start to stabilize, and then the 20 years start to stabilize, and the 10 years are going to be the most volatile ones. Of course, these over here, leading up to the 10 years, are going to be also pretty volatile, but the 10-year bond is usually the most volatile because it's the one that is used for all valuations. I wanted to point out Chewy's earnings results. This was actually something that I wanted to kind of go through with you guys very briefly. A couple of things that stood out to me. They have turned its first profitable quarter. A few things that stick out from this earnings report. I found it to be a really great earnings report. They have good guidance as well. There is a possibility that this stock will just shoot through the roof, but I just want to point out the important things. Q4 net sales of $2 billion for an internet business. That's great. Gross margins at 27%, pretty good. Net margins at 1%. They'll work on that, but it's up 550 basis points. Okay. And then if you look at the fiscal year 2020 net margin is 1.3%, up 390 basis points. That's really awesome. Q4 2020 EBITDA margin, that means cash flows, 3%. And adjusted EBITDA at 60 million. So cash flow from operations at 60 million. Net income 21 million. So their first profitable quarter, but net loss overall year for the fiscal year 2020 was 92.5 million. So the first profitable quarter, but then yearly they're still yet to be profitable. But this is a good trajectory, right? Check out the net sales per active customer. It's up 3% year over year, but it's a big sum of money. Okay. And for the whole year, they had grown their net sales by 47%. That's pretty awesome. And then you have the financial data here that you can have a look at in your free time when you get some free time. There was also some other stuff that I wanted to point out here. Auto ship customer sales, which is awesome. Customers whose orders are shipped through the auto ship subscription program during the preceding 364-day period. So they make $1.3 billion automatically, like it's a subscription. That's great. I think that model is awesome. And that's really beneficial for a company like this. And you can see that net income has been increasing, decreasing at an increasing rate. Okay. Adjusted EBITDA is also looking great now. From having deep reds to swinging into positives and bare negatives. This is good. Remember, what is EBITDA? Your cash flow from operations. That's a very important metric for us when we're using to value businesses. Okay. And free cash flow is now positive, which is beautiful. This means that the business is actually having money left over after its financial obligations. This is great. Okay. I think this is a great time. If you haven't already considered investment in this business, it seems like a great time to start a starter position, right? It's a great time to enter a starter position. And the market is certainly rewarding Chewy with this earnings report. The stock is now up 15%. It's up 15% now. And so my calls are actually in the money now, which is crazy. And so we'll see if this can continue. And what else? Okay. Okay, so let's go through the ticker of the week, Palantir. I did a valuation of this business. Now note something about this company's financial metrics, guys. This company has cash flow from operations that are getting deeper and deeper in the red. Okay. And obviously we don't blame them. Why? Because they're a growth company, and you know they have to invest every single dollar to make their bottom line increase in the future, right? And so if you look at EBITDA here, quarterly is still positive, but overall year over year is negative because expenses are really high and they're expanding operations. Okay. Obviously net income is going to continue to be drawdown. They're going to have deeper net income before they're actually going to turn profitable. So Palantir is going to struggle for a while, but it's a good thing because they're a growing company. Okay, I wouldn't expect this company to be profitable within the next, I would say couple of years, right? So keep that in mind. Okay. If maybe in the next 2 years it's profitable, that would be great. But revenues are growing at a pretty nice pace. So if you look at revenues, they're growing at about a 50% pace year over year. You can see this. About a 50% pace. Okay. And so this is part of my projection for EBITDA and revenue growth. I'm taking a 50% growth for the next year, and I'm doing a 5-year DCF valuation of this business because we can't do a 10-year. We can't do a 10-year. I'm doing a 5-year DCF EBITDA exit. So we're doing a cash flow projection here from operations. Okay. I don't feel it would be fair to take a revenue projection of this business because it is a tech company with a very high multiple. And investors are going to reward this company with a high multiple with equity risk premium. And so therefore, we want to actually value its cash flows from operations instead as a measure of effectiveness of its health. Looking at this revenue growth here, now if I project this out, right, for the next 2 years, if we continue to grow at 50%, and then 40% for the next preceding 2 years following on, and then 30% in the last year, 2025, we're looking at EBITDA growth of average over the next few years. CapEx at 1.8% of revenue, which is the 5-year average, roughly. We have only 2 years data, but we can use a projection of this. Working capital at a lot. This is where majority of their money goes, right? They spend a lot of money on working capital because they need to expand the business. Depreciation and amortization at 1.6%. Tax rate, let's say 15%. This company's in a loss. They don't pay taxes, right? Discount rate at about 8.5 to 9.5. Fair enough for a tech company of its size. And that gives us a terminal value of a pretty high EBITDA multiple, by the way. Okay. This puts the fair value of Palantir at $14.67. All right. So which means to say that this company is actually overvalued. All right. This company is actually overvalued right now. So where is Palantir's actual intrinsic value? Let's go ahead and plot that. $14.60 something cents. 60. Let's just say 14.50. 14.60. There we go. So the intrinsic value of this business is actually far below here, right? It's far below here. So this business is $14.64 right now. In the future, we will have to reevaluate its cash flows. We'll have to reevaluate its valuation in a year from now to see where it's at, right? We won't do a valuation of this business again until we see a compelling reason to. And so till then, we'll leave this valuation here. So there we have it, the ticker of the week. Kind of sorted out there. I think, in my opinion, paying an equity risk premium for this stock right now is not a bad idea. What are you actually paying? You're paying a difference of about $8 in equity risk premium, right, to own the stock right now, ahead of its future. If you're an investor that doesn't really care about short-term losses and you're thinking long-term in terms of innovative technology, then Palantir, $8 difference between the intrinsic valuation to where it is, you would overpay for it, right? But if you do care about your short-term investment, then you wouldn't invest in this business right now, okay? So that's what will really determine. It's going to be a risk tolerance to understanding whether you would invest in this business or not would be determined by whether you think that it's profitable or not, okay, in the future. All right, great. So that's done. Fair value is much lower, and we'll see how this company performs. I do think that in the near future, it's going to make a run up to the $27 level at some point. So keep in mind that. To the medium term, resistance is where it might make a run to, since it's rejecting the demand zone right here. So keep your eye on Palantir and wait for the run up. All right, cool. Okay, good morning, good morning. How about GSX, Chinese Education Online Platform? Great. If you want to invest in something specific, if you know what they're about, you want to invest in that, sure. But my approach of investing in Chinese businesses is very simple. I will never buy just a single Chinese business until and unless I know that the business is undervalued and they don't fudge their books. For me, the only two companies that don't do that are Baba and Baidu. These are like the creme de la crop of the Chinese stock market. And they're trading at deep valuations, so I bought them. Other than that, if I want to invest in the Chinese stock market, I go with KWeb. If I want to do Chinese tech, and I will go with ASHR if I want to do mainland China stocks. So like stocks that are within the Hong Kong stock market, Shanghai stock market. This is the one you want to go for. If you want to invest in the Chinese economy, this is the one you want to go for, right? So it's a good thing to diversify between your investments. You don't want to keep all your eggs in one basket. You think that's a great company, but what if tomorrow it gets, punted down for something else? So that's not the way I like to do things. I like to keep, some kind of security. Okay, and the way you do that is through good diversification. What do you think about IQ? I'm thinking $20 calls for May 21st. Might not be a bad idea, but remember that this thing was part of the Archipelago outflow funds. Remember another thing, Johnny? It's those funds have yet to de-level all their positions. Expect further pain. Expect further pain in IQ. Okay, expect further pain. There is still about, I think, 5 billion in the Archipelago deleveraging that has yet to outflow, and so people are still holding on to their positions. So my recommendation: don't bet on something that's in part of a process that's still messy. That's my recommendation. I would say stay out of IQ for now. Okay, what do we want for the ticker for next week, guys? McDonald's. Do we want McDonald's? Is that the one we want? Or do we want Wendy's? Or do we want, what do we want? Come on, let's have a vote. There's 41 of you guys. Also, if you're here, make sure you guys smash the like button, please. Come on, guys. If you can take a second out of your day, do me a favor, hit the like for me, subscribe, you know, all the great things that we do on this live stream. We do it for you. You know, oh, and also, I don't know if you guys saw, but I have an announcement for you guys. Hold up. Let me see. Boom! I got A and a B plus for this quarter. So all the studying paid off. The week off that you guys, you know, were patient with me about. Thank you very much for it. Ended up doing well this quarter, and I hope to continue doing well. My cumulative GPA now for my master's program is 3.833 GPA. I hope that I will be able to maintain this over the next quarter. This coming up quarter, I'm going to be taking financial fixed income analysis, which is bond market, and derivative market, which is options. So that will be the next thing that we will be watching. Okay, cool. What about Rite Aid? So, what are we doing for the ticker of the week next week? Facebook? No, I feel like we've done Facebook a while back, right? We could do Facebook again, but I think it's too close to do that valuation. We have done Facebook before. Definitely done Facebook before. Oh, have we not? I feel like we have. Lululemon, Chipotle, Disney, CrowdStrike, Salesforce, AMD, Neo, UPS, Teladoc, PayPal, Beyond. You want to do Beyond? What ticker do we want, guys? Rad, right? Rad. Remember, good companies only, like good companies. And if you're telling me, right, hey, this is a 1 billion market cap, no, let's skip that. Let's do a 10 billion. Come on. Sunrun. Okay, let's see. 11 billion. Okay, that kind of fits the bill. Do we want to do Sunrun? I don't know. This is considerably undervalued too. PayPal. PayPal we've done before. McDonald's was good. Why wouldn't you guys want McDonald's, man? Guys, come on. There's 40 of you guys here. Tell me that you can't take a second out of your day to smash the like button. Come on. Come on, guys. McDonald's. BP. Ooh, that's another good one. Damn. Jacob. That's another good one. BP is undervalued too. Micron. Damn. Okay, guys, I'm gonna put a clock on this and let's funnel it down. All right. Everybody stop. Everybody stop. Everybody stop. It's like so hard to choose. All right. We're gonna choose between McDonald's. Okay. McDonald's, BP, Sunrun. Playboy, come on, man. McDonald's, BP, or Sunrun, and vote now. Go. McDonald's, BP, or Sunrun. It's either one of these, and I'm gonna count them up right after the word. Right after the word Playboy, okay, so that I can know where it starts. Okay, 1 BP, 2, 3, 4. Sunrun at 3. BP, MACD, BP. Okay. All right, let's tally them up. Hey, you can't say BP twice, Peter. Sunrun. Okay, let's see. Let's tally them up. Come on, everybody. Let's have your votes in. Come on, please. BP is a really good one, by the way. Really great one, in my opinion. This is an undervalued energy play. All right, let me tally it up. BP, let's see. 1, 2, 3, 4, 5. six BPs. All right, Sunrun 1, 2, 3, 4, 5, 6. Come on. Come on. MACD's the lowest. 1, 2, 3, 4, 5. Yo, you guys are crazy. You guys split between all of them. What's going on? All right. Let's go again. All right. So everybody stick with that. I'm gonna count again. All right, BP. Let's go. 1. Let's go. 1 BP, 2 BP, 3, 4, 5. I'm not counting the repeat. 6, 7. Okay, 7 BPs. Next, Sunrun. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, Sunrun it is. All right, fine. All right then, Sunrun. Got it. Only count the ones that hit the like button. Sunrun it is, guys. Sunrun it is. This one is looking interesting too. For sure. Sheesh, we're gonna have to do this on a 4-hour chart. The 1-hour chart looking nasty. All right, Sunrun it is. We had more votes for Sunrun. It overtook BP by like 1 or 2. So we'll do Sunrun. All right, that's going to be the new ticker of the week next week. Remember, guys, we don't have a live stream on Friday. So this was the live stream of this week, the final live stream of this week. And we will revert back on Monday. So I'll see you guys on the 5th of April. Also, just to keep you guys in a loop, for those of you that wanted to join the beginners course or the technical analysis course, we're going to be holding them both again next month, okay? And if you're looking to join the beginners course, it's going to be between the 12th to the 16th of April. And the technical analysis course is going to be between the 26th to the 3rd. The technical analysis course is now going to be a 6-day course. I've amended the course curriculum based on feedback from the students. We had, instead of a 5-day course this past first wave, we did a 6-day course because it was a lot of information to cover. And I think the pace of learning was great. I think a 6-day course suited it better. So we will be doing a 6-day course for the technical analysis course at the end of this next April. Okay, so beginners course will be 12 to 16 and technical analysis 26th to 3rd of May. All right, just in case you were wondering, we're going to also make announcements on Instagram and watch out for those. If you want to sign up, please make sure you sign up as soon as you can so that we know your interest. Okay. All right, well, I hope you guys have a great rest of your day. Thank you very much for attending the live stream. As always, EJA Tribe, I love all of you all. Thank you very much for supporting me through this journey. You know, I don't say it often enough, and I don't say it much, but I really, truly love all your support. You know, it doesn't matter whether there are 1,000 people here or 1,000,000 people here. As long as there's people here who actually just show up and are consistent, that's what I really value. Consistency is really, really underrated in this world. And the fact that you're here day in, day out supporting me, that is what makes the most to me. I don't care whether there's 10. I don't care whether there's 5. I don't care if there's 300 people here on the live stream. What's important is that we work together and we put a smile on each other's face to prepare ourselves for this market, because we can't do this alone. We need to be a tribe. We need to tackle this together as a family, and as a family we will succeed by the end of this year. Okay, I share in return, I share with you everything that I know, and I help you to simplify everything from my perspective, so it's easier for you. The workload's not that hard, and we do it together and we have fun, right? So I hope you have a great week ahead and enjoy your weekend. There's going to be a Friday off this week, and enjoy it with your family. Take some time off and relax. All right, guys, don't stress out. And yeah, I'll see you guys on Monday. Take care, peace out, and I love you all. Bye-bye.